You walk into a boardroom on the 47th floor. 5 people. Between them, enough capital to reshape a mid-sized economy. You don't sit at the head of the table. You sit where the light is worst. You speak for 4 minutes. You ask 2 questions. The room calibrates to your answers. You leave before lunch. You are 61 years old. Your net worth is $100 million. And here's what nobody told you. Rewind 38 years. You're 23. 11:43 on a Tuesday night. You're lying on a secondhand mattress you bought from someone on Facebook Marketplace. You check your bank app. $1,247. That's your balance, not your savings. Your balance. You check again at 11:44. The number doesn't change. You have $31,000 in student loans. $4,200 on a credit card. A direct deposit lands on Friday and it's already spent. You are not behind. You tell yourself you are not behind. Every grocery run is a calculation. You put the olive oil back. You buy the store brand. You split a streaming password with someone you don't particularly like. Because canceling feels like losing. This is what zero feels like. Not dramatic. Just a low, constant hum of arithmetic running underneath everything you do. You don't talk about money. Nobody does at this level. But everybody is doing the same math. You know your account number by heart. You move $200 to savings, then move it back 3 days later. You watch your bank app more than your messages. Here's the first rule. At zero, your relationship with money is entirely emotional. And emotional decisions compound in the wrong direction. You get a raise. Not a big one. $6,000 a year before tax. $387 extra per month. You feel rich for exactly one afternoon. Then the car needs $900 in brake pads. You learn something the raise could not teach you. Expenses expand to fill whatever space you make for them. You pay off the smallest credit card. $1,200. You screenshot the zero balance. You send it to nobody because nobody would understand what the screenshot means. But you understand. A number moved in the right direction because of a decision you made. That's the moment it begins. Not the raise. The decision. You are still broke, but now you are broke on purpose. 3 years later, you cross $10,000 in savings. You're 26. You have never had 5 figures in your life. Not once. For the first week, you check the balance constantly. Not out of anxiety this time. Out of disbelief. The psychological weight of $10,000 when you have never had it is disproportionate to the number itself. You feel like you cross into a different category of person. You have not, but you feel it. You start reading. Not self-help. Not motivation. Actual books about how money moves. Index funds. Tax advantage accounts. Compound interest. You open a brokerage account and stare at it for 3 weeks before you put anything in. You invest $1,500. The market dips the next day. You almost pull it out. You don't. This is the moment you decide whether fear is running your decisions. Or you are. You're 29. $40,000 saved. $68,000 a year salary. A Roth IRA you're actually contributing to. By every measure, you're fine. You are doing exactly what you were told to do. Maximum 401k contribution. Emergency fund. Avoid lifestyle inflation. You're following the entire playbook. Then one night, you sit down at midnight and you type the projections into a spreadsheet. 40 years of disciplined saving at your current income. Compounded. Maxed. Optimized. You stare at the final number for a long time. It's fine. It is enough. It is not what you want. Something shifts in your chest. This is the competence plateau. You are good at surviving. You are not yet good at building. And here is the second rule. Salary is a ceiling dressed up as a floor. The moment you see it clearly, you cannot unsee it. You close the spreadsheet. You don't tell anyone. But something has already moved inside you, quietly. The people around you will not notice for years. They will keep telling you that you are doing it right. They are not wrong. They are just working from a different map. You start a side project. You don't call it a business. It is just a thing you do on weekends that earns $400 a month, then $900, then $1,700. You don't tell your employer. You don't tell most people. You reinvest everything back into it for 14 months. You eat the same lunches. You drive the same car. You don't upgrade anything. Your net worth crosses $80,000, then $110,000. You start feeling the gap between where you are and where a salary alone would have taken you. The gap is where the leverage lives. Your investments return $3,800 in a single year without you doing anything. An asset, not theoretically, physically, a thing you built or bought that earns while you sleep. Your relationship with time changes. Every hour spent on something that doesn't compound is an hour the machine isn't running. You cross $150,000 in net worth. You're 32. A rental property with $44,000 in equity. A brokerage account at $61,000. A business generating $6,200 a month. You still drive the same car. You don't tell people. You've noticed that talking about money at this level makes people strange, either envious or dismissive. Neither is useful. You start saying no to things that used to be automatic yes. A destination wedding you can't afford without liquidating. A group holiday where you'd be subsidizing 3 people. A business opportunity pitched by a friend who does not understand cash flow. No, no, no. You feel the friction in the relationships. You feel it, and you stay quiet, and you say no anyway. You stop spending money to maintain relationships. You start protecting capital to build options. At 300,000, your money is starting to have a personality. It has preferences. It wants to go certain places and resists others. You lose $9,400 on a bad trade. You don't panic. You reposition. You are 36. You restructured the business twice, brought on a partner, exited one investment, rolled the proceeds into something bigger. You are not sleeping as well as you used to, not from stress, from intensity. You run scenarios in the shower. You send emails at 5:30 in the morning. You turn down a job offer paying $210,000 a year in salary. Your parents do not understand. You do not explain it fully. You tell them it didn't feel right. That's partially true. Then it happens. A Tuesday. Nothing ceremonial about it. Your brokerage updates. The number is $1,040,000. You sit with it for a moment. You thought you'd feel different. You thought there'd be something. There's a quiet satisfaction. And then, almost immediately, it is not enough. Not in a frantic way. In a clear, practical way. $1 million at a 4% return is $40,000 a year. That's not freedom. That's a starting point. The identity crisis is not that you are not happy. It is that happiness was never the point. And you are only just admitting that to yourself. Here is a third rule. The millionaire arrives and realizes the milestone was never the destination. It was the proof of concept. For years later, 2.3 million. Money stops being a source of anxiety entirely. For the first time in your adult life, it is simply a resource. Like time, like attention. You hire a wealth manager. You fire him when you realize you know more about your own situation than he does. You find someone better. Someone who charges more and talks less, and has clients you have heard of. Your business does 4.1 million in revenue. You own 2 rental properties. Your portfolio is at 1.6 million. You are not rich in the way people mean it at dinner parties. You are wealthy in the way that means you have time. Actual time. You take a 3-week trip. You do not check email for 5 days of it. This is a thing people cannot buy at lower levels. Not the trip, the 5 days. At 5 million, the game changes texture. You are no longer building. You are positioning. You are moving capital, not working for it. The distinction sounds small. It is enormous. At 10 million, your reputation becomes a financial instrument. It earns returns independent of your decisions. People who have never met you know your name. People you have never met want to invest next to you. A family office managing $600 million calls about co-investing in a deal you're leading. A private equity firm wants you as an operating partner on a platform acquisition. You are invited to rooms you used to only read about, not celebrity rooms. Rooms where decisions are made. You are there because your capital and your pattern recognition are genuinely useful to the people around the table. That is a different kind of power. You start studying the people at 20 million, then 50. The way you once studied the $10,000 mark. You watch how they think, not what they own. How they think. The pace is different. The patience is longer. They are not trying to win each hand. They are trying to stay in the game longer than everyone else at the table. 50 million. You walk into rooms where the minimum check is 8 figures. A trust that will outlive you. A foundation that costs you $800,000 a year and functions partly as access. You understand this. You do not pretend otherwise. You have stopped pretending about most things. Pretending costs energy. And energy is the only currency that does not compound. You have not worked a conventional day in 9 years. You have not stopped working. You think in cycles now. Demographic cycles. Infrastructure cycles. Credit cycles. You position ahead of them the way a sailor reads, weather 3 days out. You are sometimes wrong. Being wrong at this level means a position underperforms by 200 basis points, and you rebalance. It does not mean your life changes. You own pieces of 11 companies. You have a direct line to people who set policy, not politicians. Policy. You do not lobby. You advise. The distinction matters to you. Maybe it should matter more. At 80 million, the isolation is not loneliness. It is a different problem. The people in your life exist at a remove from what your reality actually is. Your closest friendships are with people who operate in the same altitude, not by design, by natural selection of conversation. The things that absorb your attention, fund structure, regulatory positioning, dynasty trust, secondaries, carve-outs, simply do not translate. You are not a different person. You are a person whose context has become untranslatable to most people who knew you before. You stop going to events, the startup meetups, the finance seminars, the networking happy hours where everyone talks about what they're building and nobody talks about what it cost them. You do not have contempt for it. You just do not need it. A company you're invested in restructures its workforce. 140 people. You know the CFO. You have had dinner with him. You do not call him about the layoffs. You review the cap table. You hold. The company's margin profile improves. Your position increases in value. You do not feel good about it. You do not feel bad about it. Not for long. You feel the distance. The gap between your decisions and their consequences widens. Quietly, and you do not resist it. Your net worth crosses 100 million. The exact figure is known to 3 people. You are 54. You have structures in place that will outlive you. You give more than you ever have. Not for reputation. Not entirely for foundation access. Though you understand that is part of it. You give because at this level, money has stopped being a measure of anything meaningful about you. And giving is one of the remaining things that still feels like a decision. Like it means something. Here is the 6th rule. Above 50 million, money stops measuring your worth. It starts measuring your reach. A board meeting. 5 people in a room with enough combined capital to reshape a mid-sized economy. You speak for 4 minutes. You ask 2 questions. The room moves around those questions. You leave before lunch is served. This is power at its most compressed. No spectacle. No volume. Just a room that calibrates to your position. You walk back out into the hallway. You take the private elevator down. Outside, the city is the same as it's been for decades. You are 61. Your net worth is 94 million. You sometimes think about the balance. $1,247. You remember the mattress, the secondhand smell of it. You remember the first screenshot of a zero balance on a credit card. You remember how it felt to feel rich for one afternoon. You remember all of it, and you know the true cost, not in dollars, in distance. The gap that opens between who you are at the beginning and who you have to become to reach the end. Every level costs something. At 0, it costs your certainty. At 10,000, it costs your fear of loss. At 1 million, it costs your need for arrival. At 50 million, it costs the kind of softness that does not survive at altitude. And at 100 million, it costs the experience of needing anyone at all. The machine does not ask if you are ready. It does not ask if the trade is worth it. It opens every morning, and it takes whoever shows up. Somewhere in the city right now, there's a 24-year-old opening a banking app for the first time. Their balance is $1,247. They are standing in line at a grocery store, doing the math. They put the good coffee back. They get the store brand. They think this is a story about money. They think if they just make more of it, something will resolve. They do not know yet what has to resolve. They do not know what it will cost. Not in dollars. In distance, the balance is 1,247. It always starts there. It always will. So here's a question nobody asks you. Not at 0. Not at 100 million. Not in between. Where are you right now? And more importantly, when the machine opens tomorrow morning and asks whoever shows up, are you the one who shows up? Tell us in the comments below. Show up tomorrow. That's where the compounding starts.